Hey everybody, I'm suffering through another bout of allergies, so I apologize for the coughing. My name is Daniel Young. I'm the owner and founder of Adaptive Perspectives. I believe it's my purpose, my calling to help you identify your dreams and help you reach your financial freedom destination and maintain it so you can pass your wealth off to the next generation. The video continues to demonstrate what we're offering, what I'm offering in our closed-end fund master information, the consolidation of data, our own funds, how we filter that data, then making some recommendations on that filtered data. This is an unedited video, but who knows what you'll hear in the background as I film these in my house. And then I will really just review our closed-end fund system. So the disclaimers, I'm not going to read them all. So if you want all the disclaimers, look at the description. The only one I'll mention here is that I am not a financial advisor and that I am a financial strategist. I don't speak like the herd. I walk in limited company, and sometimes I walk alone, and I'm okay with that. So let's get to these selections. We got to share a screen. So this is the complete closed-end fund master, and being that it is, excuse me, being that it is the end of the month, I went ahead and updated the entire list. And what you get are all of these different targets. We owned everything in blue. Green is what we target. Purple is recommended by other people. And these are all in my notations. So allergies, I don't know what changed today. Something did. So if we get into these, first and foremost, we're going to screen out by discount. So anything, I mean, that'll stay at break even, but anything in premium, we don't want. Now, based on targets, quite honestly, we're not looking to buy anything. And even if you don't have a closed-end fund, or if you have closed-end funds, there are some amazing things at the top of this list. Just based on discount alone. So nothing new means we're going to stick to everything in blue. I don't know what spiked my allergies today, but it is not almost back in full force, but it is close, and it is just not fun. So targets. We're going to focus on the things that are in historical discount range. Man, all the way back up. I don't like a blank spreadsheet at the very bottom. Like I like rows after. I'm sorry. I got to battle through. So all of these are historic targets. They're funds that we already own because they're in blue. And they're notated, so based on their discount. So that's got a 37.27 discount. It is one of the most significant discounts on the closed-end fund list. It's twice the historical data. It's almost twice the 5-year data. And they're all earmarked for different reasons. So it comes down to both current market and where I think things are going. And to kind of get into that. So this is really the only service I pay for. This is my account on the Contrarian Outlook. And you can pause this video and read this section in blue. I'm not going to read it all to you. But one of the guys that I follow is recommending BDC, or business development companies. It's kind of like it's like a private equity investment for the average guy or average girl. Um, and instead of going with individual BDC, there is a closed-end fund for business development companies. And this is what we're invested into. Everything in our portfolio is only closed-end funds, and it is all self-managed, meaning I don't pay somebody else to manage this. We manage this, or I manage this. I pick the funds based on market trend, based on where I think things are going. I read all the stuff and then make selections. And at the forefront of that is we filter things based on discount. And then based on discount, so the buy alerts are double the historical or the 5-year discounts, or they're finally below premium. Two would be a dollar cost average, what we already own. Tracking is, we track maybe 80 different funds total, including our targets. So based on the discounts, these are all significantly different discounts. So they're all targeted, right? After that, I can sort by yield, always reverse. So I like to keep things at 9% or above. And you want a sustainable yield. We dropped a fund. We very recently dropped a fund for a lot of different reasons. Cuba went all cash. They've been all cash for a year. And it's a dividend reinvestment, meaning they paid and then took the money back to give me more shares. So we hit our 20% margin, and we just sold it and cut our ties, and we'll reinvest the money. But if it's a sustainable dividend, right, then that means they can keep paying. NCV and NCZ had a higher dividend, but with the banking stuff and all of that, these are pretty much banking tied. They had to drop their dividends, but they still pay amazing dividends. FEI has not raised their dividends since COVID. KYN is oil-based energy transfer. They've raised their dividend. There are a couple other energy transfer oil-based companies we own that have raised dividends, but not this one. Now, if they did raise their dividend, I mean, gosh, if they raised it a cent, right, or even 2 cents, that changes the game. Brett Owens, who runs the Contrarian Outlook, has a saying that or has like a stipulation of stock, and he calls it the dividend magnet. When companies raise their dividend, it'll also raise the price. And in closed-end funds, we're looking at the price versus the actual net asset value and the discount. So if they raise their dividend and the price jumps, then the discount goes down. Excuse me. So as it stands, they haven't raised their dividend. So this is above what we already have. So it's still dollar cost average, meaning it would low. I'll show you on our complete list. That's our existing average price. 815 is not a huge difference, right? But it would probably raise that overall price of share. And honestly, with them not raising a dividend in a long time, just doesn't make the cut. But of the best value, I would still, me personally, I mean, the whole, like, if there's blood in the streets, then still buy, even if it's your own, if it's your own blood. Like, I completely get that. all of these funds are pretty much below what we've bought them at. So they're great dollar cost average buys in that sense. But if we're going on discount, all of these are still great buys because their discounts are currently uh, really at least double than their historic or their 5-year discounts. So then it becomes we look at yield, or we're back in order. Do we just go based on general awareness? ZTR is a portfolio in a can. It's a moonshot. It has a fairly consistent 2-year cyclical pattern. We just bought more of that. I took my own advice off this video. Excuse me. I took my own advice. We leveled up our ZTR amount until it was 200. Us personally, we're not going to buy more of it right now. The NCs, it's banking based. We're not going to buy more of that right now. H2Y's technology, it's on the list of kind of like what's next. It's not on. Well, I'll leave it on this list. HFRO remains the biggest discount and still pays a healthy dividend. Its sister company, HCLB, with the global fund, they tend to vary or kind of bump up a little bit, bump up and down a little bit more than something that's just straight U.S. investment. Business development will stay on the list. Oil will stay on the list. The truth of the matter, so there's satellites and utilities, cloud data management, and tech and semiconduction. All of those things require oil. I mean, they all require oil. So even though each of these portfolios is diversified within their own subsection of the market, oil influences the entire market. And whether you like it or not, oil is going to be around for a while because oil and its after products or byproducts so yes, it gets into gas, right? It gets into oil, and the synthetic parts of oil, but it also gets into microchip development, solar panels, the infrastructure of our country, crutches, this laptop, your phone, any kind of technology-based device has an oil byproduct in it. So for our country to go, hey, we're not going to make any oil and go oil free, that doesn't help anybody. So we need to expand our grid, right, and update our power grid, and all of that's going to take oil. So as all of these other subsections of the market continue to grow, oil will power those other subsections of the market. So if I'm picking on discount alone, that's HFRO. As a shareholder of it, not exactly happy with the company overall. But that's just me. There are others who are happy. Two people I know, and they're mentioned in this economy section data, like how the company's run. But on the forefront of what you see, I don't like how the company's run. So it's not going to make my list. But of where we would go, and me personally, every company we're going to hold long term or really lifetime, I've been trying to bump up to 200 plus. So that being said, I also want the best deal I can get at the time. So I think we own 250 now of KYN. And if they actually go through with the merger of KMF's a great buy as well. But if they actually go through with the merger, then KYN will buy KMF. Those KMF shares will transfer into KYN at less than a 1-to-1 transfer. So we'll end up with more shares there. Excuse me. But if I'm looking at where to go, and looking at overall discount, overall value, where I think the market's trending, then I'm going here. um, if you want info on past weeks of what I've said, uh, you can look at past videos and look at all of these different selections and all the different recommendations based on the selections. But for today, short and sweet, this is where I'm going. Oil and energy transfer, overall tech and semiconduction, and private equity or business development company. So oil, business development, semiconduction, um, based on discount, based on their historical data, based on the overall yield. And oddly enough, I mean, I've been trying for consistent monthly payers. None of these pay monthly. But what they do pay, they pay significant. So that's really all I have. So let me stop the share, come back over. Right. So that's really all I got, short and sweet. So if you like the content, consider subscribing to the channel, and then head over to Facebook and join my group there called Navigate Your Finances. The link will be below. And just remember, regardless of your investment goals, you need to know your investment goals and what you're really trying to do. Because if you have no idea what you're doing and no idea regarding your methodology, it'll be really hard for you to consistently keep to that methodology and push it along. Right? If you're erratic in what you're doing, you're never really going to make progress. It's kind of like turning your boat in a circle, never really going anywhere. You can spend a ton of money, but just your erratic behavior, you never go anywhere. So in doing that, so you need to know your strategy, know your whole game plan. You don't have to have all the answers, but you need the direction you need to go. So if you go to Facebook, I talk about going from where you are now to where you want to be and the methodologies involved in that. In Facebook, I talk about earned income, I talk about passive income. But if you don't know where you're going, you want to know how to get to or get from where you are to where you want to be. If you want the game plan and the battle plan, go to Facebook and check that out. Just search Navigate Your Finances and look in the free files and essentially take a trial run. If you know what you're about, the whole goal of this is that we keep our principal intact and then we live off the dividends, right? So we retire on dividends and we don't retire selling our portfolio every single year, which 4% inflation eats your portfolio. So on that $1 million, a 4% loss, right? That's a lot of 40 grand. And then the 4% rule is that you take 4% out, hoping that you'll make it back with just the general growth of the market, but the market doesn't always grow. And if you're living off more than 80 grand, you're not going to suddenly cut all your expenses by 40 grand. So it's not like you're going to live off 80 grand and then cut everything and live off 40 grand. So that 4% rule on the $1 million invested for just you, not your spouse, is a broken system, right? So it's not a 4% rule. 4% meaning you can take it out, 4% you can hopefully gain it back. You're not going to gain it back every year. 1. 2, it's not 4% out. You're going to take at least 8% out every year. And you're going to lose 4% on that value just based on inflation. So you're going to run out of your money faster than you realize. So if you can change your methodology to then live off dividends, your principal remains intact, preferably it grows, right? But regardless of how the market swings, you get paid in dividends. So instead of taking 40 grand out, now you're just taking 40 grand in dividends, or based on our system, our current portfolio, I'll go back to our portfolio. Our current portfolio gives us just over 9%. So 9% off $1 million is 90 grand in dividends a year. So then it's structuring our portfolio to make those consistent. So now we're living off dividends. and living off dividends that are paying higher than just that 4%. Now it's 9%, right? So now we're living off dividends while the principal stays intact, with the goal to then continue to invest and grow the dividends. So again, you got to know your strategy. So in doing that, you have to actually captain your ship, meaning you've got to actually lead it on a course. And you've got to you have to start a journey. It's not a kind of, it's you have to start a journey and be on a journey and know where you're going. And then once you hit that spot, then you have to maintain it. And that's the whole point of this page. So you're the captain of your ship, right? And this is why I say, I'm kind of jumping, I know, but this is why I say I believe it's my purpose to help you identify your dreams, right? So to know where you are and know where you want to be, and then help you reach that financial freedom destination. So in knowing where you are and where you want to be, I believe it's my calling to help you get there and then maintain it, right? When you keep going, and then pass it off to the people who follow you. So you're the captain of that ship. I can't pilot it for you. You've got to do that. I can help you and I want to help, but you've got to make all the decisions, right? There are a lot of people who want to help. You've got to be discerning and then pick the people who you think will actually help you, right? So you have the power to change your life and your financial future, and you can. It looks crazy, it looks daunting, it looks like it'll never happen. You can do it. Many people will offer to help you, right? I'm offering to help. If you get caught scrolling on TikTok and Facebook and everywhere else, you'll see all of this other financial advice. There are a ton of people who say they want to help you, but who don't really want to help. If you want to know more of that, check out my financial memes here. You can find me on Pinterest at adapt_your_perspective and look at the financial memes. And 98% of those financial memes are just bad financial advice. Many people will offer to help you. You've got to be discerning to see who's actually going to help you and who's not. And then make the choice to follow the people you think will actually help you. So if it sounds crazy, I used to be where you are. There's no way I could learn the system. There's no way I could understand the system. There's no way I could actually do it on my own to where there's no point, like there's no way I could make a dividend. There's no way I could do anything, but it's possible if you want to do it. I can't make you do it. You've got to be ready. Well, you've got to be willing to take it on, right? I don't want to manage your money. I want to help you manage your money. My goal is to sell the system, and that sell the access to the closed-end fund master, and help you invest your money by giving you the data, giving you the information, and then not taking your investment money. We do our investing on Webull. It's all self-managed. If they actually had an affiliate thing I could post, I would post it, but they really don't do it that way. But our portfolio on Webull is completely self-managed. So we buy, we sell, we add to our account, all that stuff, and you can do the same thing. It's very easy and much easier than culture would have you believe. So my hope is to take this closed-end fund master and market the system and market the data and share that, right? And have a membership access to this and help you invest by giving you the data and at the same time empowering you to invest your own money. I don't want to invest for you. I want to help you invest your money and make the best decisions for you. I don't want to make your decisions for you. I want to give you the data and set you up to make the best decisions for you so that you can take on that challenge and feel empowered and then invest your money and see some growth. So if you think it's crazy, I was there. It's not as crazy as you think. It's challenging because it's new, but it's very doable. right? So if you want to see progress, you're going to have to make it happen. So make it happen and shock your world. This is Daniel Young signing off. I will see y'all on another video. Hope you have a great week. Bye-bye.